be wiser as an educated advisor. Hello everyone, I'm Steve Savant, syndicated financial columnist and money color commentator. On today's show, tax-free income, part 1 in our series on index universal life insurance. All here on Let's Get Down to Business.
Now, I made this statement, I've been saying this statement now for about almost a decade, that the greatest financial product that's ever been conceived for retirement income is index universal life. Now remember, this is a suitability issue, so when I say the greatest, I usually want to use the term, you could use par whole life, you could use variable universal life, you could even use universal life. But for our purposes today, I just want to talk about indexing because so many people are into it, and I want to explore support items where you can really frame your argument or discussion. You can frame it in such a way that when you look at this product against taxation, against hedging, you're going to say, wow, this is a super product. Now, I've been in the industry 35 years, and my mantra on this deal is if it's done correctly, it's almost unbeatable. If it's done incorrectly, it's never defensible. It's just indefensible. You should see, when we looked at the 10-year lapse ratio during 2000 to 2010, we said, look at what our indexing did. We did 6.6% plus when everybody else, the true S&P 500, actually lost double digits. But it doesn't matter if my policy expenses are taken off the top and I'm sitting there with a 1% or actually negative returns. So if it's done correctly by suppressing the death benefit, and I'll get into all that in a moment, we can really do a fantastic job, make it tax-free, and then as it relates to other products that are tax-free and how it relates to Social Security taxation and retirement, this is unbelievable. So let's go into it. Thunderbird School of Global Management. These people are into it. Last time I went, I sat with 6 millionaires and 2 billionaires at my table before I got up to speak. They came for one reason and one reason only. There were 13 different seminars. But in my view, almost all the people were going to the variable universal life offshore private placement, and they were also looking at modified endowment contracts with using universal life. And the only reason they were looking at these two products was because of the tax-favored treatment. So keep that in mind. Even though you may look at it as a coverage issue, I'm not talking about indemnification today. You may look at it as an inheritance issue, a leverage issue. I'm not talking about inheritance today. I'm talking about tax-free income. And it's not only tax-free, truly tax-free, but it's not going to tax your Social Security. So when you're looking at tax-free, when I'm looking at this, the higher, more affluent the client, the more I'm driving the issue of tax. I don't really care about indemnification. I'll catch it later. I don't care about inheritance or transfer or creating a legacy. I'll take that later. I'm talking solely on income. And believe you me, you're going to need some non-qualified monies to make your retirement really work for you. Almost everybody has almost all their money in qualified plans. There is no basis in qualified plans. It's all taxable, and all of it is includable in your Social Security benefits, which means you could get your benefits taxed as well. So it's really important to look at this. Look, the affluent are seeking tax relief from ordinary income and capital gains. Now, I'm going to be sending to the marketing and salespeople my patented tax manual. It's from Advices Advance, whom I'm a co-contributor for. I don't want you to read it. You'll drown in it, right? But it'll be there for your backup. You'll always be able to refer to it. It's really a good text. You really should have a basic understanding of what is an ordinary income tax and what is capital gain. For most of you that are viewing this, you pay ordinary income tax on your wages. If you were actually to take constructive receipt of your retirement plan, you'd pay ordinary income tax on that income. And you'd also pay ordinary income tax on your Social Security benefits if your benefits are exposed to taxation. Heads up, most Americans that are making $45,000 of adjusted gross income or more, they are paying taxes on their Social Security. But how about the regular people? Well, the middle class seeks relief as well. They don't want to pay any more taxes than they have to, and I can tell you this, they certainly don't want to be paying taxes on Social Security benefits. Think about it. You've worked hard all your life. You've been contributing to this system. As a baby boomer, think of it, we're probably the last generation to get full benefits. Now, I don't want to put the fear of God in all my Gen X, Gen Y, and millennial people there, but in all honesty, they're probably the actual benefits are going to probably be reduced 25%. So it's really, really important to think in terms of, hey, I need to think about taxes and retirement. And when you're middle class, you're not only speaking about ordinary income, you're talking about Social Security. Now, here's an interesting thought. Municipal bonds are touted for one reason. What is that reason? Oh, because they're tax-free. Well, they're not tax-free in every taxing venue. It could be federally tax-free. It could be state tax-free. It could be a city doing a municipality, actually underwriting a bond to have money and revenue to build a bridge or to build a utility system or whatever. Now, sometimes you can get state and federal tax-free. But keep in mind, it doesn't matter what kind of municipal bond you choose, even though it's tax-free, all that income flows over to your Social Security provisional income test, and it's includable to see if your Social Security benefits get taxed. So heads up, be advised. A lot of seniors like myself like municipal bonds because of the tax issue, right? But keep in mind that this could be a problem. And on one of my clients, I saw him bring me his portfolio, which was $1.6 million, and I looked at it, and oh my goodness, $520,000 of it was in municipal bonds. Well, I don't need to have a psych degree to tell you, listen, this guy hates taxes. People that are buying municipal bonds at that level, when 1/3 of your total portfolio is tied up in muni bonds, you hate taxes. You don't want to pay any more than you have to. So this gentleman saw our show. He said, Steve, I'd like to talk to you. I said, no problem. Send me your couple first pages of your 1040, and if you want to send me your portfolio, send it to me. When I saw the number on the municipal bonds, I saw something that I had not seen in my lifetime at the time that this occurred. I went to the second page, and oh my gosh, on page 36, he had the alternative minimum tax. There was a number in the alternative minimum tax. The government years ago said, oh, I don't care if you guys want to do oil and gas leasing. I don't care if you want to do municipal bonds. But if you do too much of it, we're going to create this new thing called alternative minimum tax to make sure you pay at least some kind of tax on this, because we know you're doing this to avoid taxes. Did you get that? So just keep in mind that avoidance of taxes is a high-profile issue among the CPA and accounting community. And they are guns. People that know this stuff well, they know how to do it. But the government intervenes all the time because our entire progressive marginal system is based to entrap the taxpayer into paying taxes. And the biggest entrapment back in the day and all the way through today, even though it's been updated a little bit, is alternative minimum tax. Now, think about it. I had to go back to this guy and tell him, I'm sorry, sir, $120,000 of your $520,000 is being characterized as a preference item. That means that preference items under the code could be subject to the alternative minimum tax. I'm sorry, in your case, it is subject to it. And he says, how can that be? And he had a little profane moment, a little bit of a Tourette's episode, and he swore on the phone. I had to pull the phone away from my ear. He was so angry. Of course, remember, I didn't put him into this, so it's not my problem. So I told him, I'm so sorry, sir, that you're experiencing a tax on your tax-free municipal bonds. I mean, just think about that. And then on top of it, he had one bond, and I had never seen this in my entire career, where it actually had a gain in it when he sold it off. So he actually had to pay capital gain tax on a municipal bond fund. So the hurt was not done. I've already told him he has alternative minimum tax. Now I'm telling him he's got a little bit of capital gain on one of the bonds, and then finally all the money that he's generating, and it was a big chunk of dough, generating from municipal bonds is flowing over to the provisional income test for Social Security, and it's causing the Social Security to be taxed at the tier 2, the highest level, at his ordinary income tax bracket. Again, I'll send you the manual. You'll be able to kind of walk and look at this stuff, study it out if you want. To me, this is one of our competing products. Index Universal Life, used in a TAMR-compliant contract, is competing against municipal bonds. They're free. They say they're free. I just told you, maybe they're not. We're competing against this as a product head to head. Every time I bring this to a senior's attention, they always start to look at Roth IRAs, life insurance that's TAMR compliant. They also look at maximizing their HSA accounts, and they even consider, just because of the tax issues, maybe I should get a reverse mortgage on the equity of my home. These are the issues that matter. I'm showing you only one issue right now, and I'm highlighting it. Municipal bond income isn't always tax-free as they tout and as they promote. Be careful. You could be paying the AMT. You could be paying, shockingly, capital gains, and all of it's going to flow over to your Social Security. It's for sure going to be included in your taxable amount there. That's why I bring it up. Does my index ever cause an alternative minimum tax? Answer, no. Does it ever create a capital gain tax? Answer, no. Does my income, withdrawals to basis and policy loans off an Index Universal Life, ever flow over to the provisional income test for Social Security benefit taxation? The answer is no. There's only 4 products. I'll get to that in a second. I just gave you one, the big one for IUL.
Don't forget to watch our next segment on tax correlation of investment products, part 2 in our series on Index Universal Life Insurance. And keep in mind, before moving forward with any ideas on our show, always check your tax consultant, legal counsel, or compliance officer. And don't forget to subscribe to my consumer show, Steve Savant's Money, the name of the game. Daily content you can post on your website, social media accounts, and database distribution. I'm Steve Savant. Thanks for watching.
Okay, we'll just roll on through.
You could be wiser as an educated advisor. Hello everyone, I'm Steve Savant, syndicated financial columnist and money color commentator. On today's show, tax correlation of investment products, part 2 in our series on Index Universal Life Insurance. All here on Let's Get Down to Business.